After some big losses early due to fears over China's currency, Wall Street rallied to finish mostly flat. The Dow had been down as much as 277 points, but ended the day down less than a point. The S&P 500 rose almost 2 points, and the Nasdaq was up almost 8. China stunned the world's financial markets Wednesday by devaluing its currency for a second consecutive day, triggering fears its economy is in worse shape than investors believed. Let's go now to Rob Armstrong from the Financial Times. Rob, great to see you.
Thank you for having me.
Why is China doing this?
Well, I think the crucial point is that their economy is slowing. There's a lot of talk about whether this is an effort to bring market forces into their formerly closed economy. I don't think that's the point. I think the interpretation that everyone is giving this, and the most likely interpretation, is that their economy is slowing much more quickly than originally anticipated, or anticipated just a few weeks ago.
Okay, we're looking now at the July exports from China down 8%.
Yep. And there's a host of other data you could look at, too. Things like electricity generation, car sales, construction square footage. All the data looks fairly bad.
Is it bad for American companies that export goods to China?
Yeah, I think it's bad for American companies that export goods. And it goes further than that. I mean, if you look at the American equity indexes like the S&P 500, those indices are filled with companies that are very international. So it's not just straight exporters. A lot of these companies do business in China itself. Yum Brands has thousands of restaurants in China, for example, Kentucky Fried Chicken or Pizza Hut and so on. So it's not just down to exporters. It's all across the S&P 500 that is going to feel the impact.
The second largest economy in the world, if it's slowing down, does that indicate that we're going to see a global slowdown as well?
I wouldn't go so far as to say that. What I would say, however, is that they were a crucial source of incremental growth. So what this makes more likely is a continuation of the kind of slow stagger that the world economy is in. Not necessarily a recession, but a kind of foot-dragging trudge forward.
And yet today, even after this happened, the American stock market kind of shrugged its shoulders at the end of the day.
Yeah, I was really shocked. There was, the market started sharply down and rallied sharply towards the end of the day. And I think there's two possible explanations for that. The first is that investors are thinking that the bad news out of China will give the Fed the reason it needs not to raise rates in the fall, as had been expected. So more dovish policy to come. The second is that investors have to buy somewhere. And as China and the other emerging markets start to look worse and worse, what are you going to do? You're going to buy the S&P 500.
Rob Armstrong at the Financial Times. Rob, thanks.
My pleasure.